Hello everyone, this is Victor here. Welcome back to the Intelligent Investor channel. In this video, I'm going to analyze Taiwan Semiconductor Manufacturing Company stock or TSMC stock to see if it's one of the best investments in the long run. More importantly, I will talk about whether I think TSMC stock is better than Nvidia stock right now. I will also talk about whether TSMC stock is likely undervalued or fairly valued now. Before I start, I want to give you some context first. TSMC is the largest pure-play chip manufacturer in the world. It is the largest semiconductor foundry in the world. TSMC does not design its chips. Instead, TSMC makes chips for other companies. TSMC is one of the most important mission-critical businesses in the world because TSMC manufactures over 90% of the most advanced chips around the world. For example, TSMC's biggest customers, Apple, Qualcomm, Nvidia, AMD, Broadcom, and MediaTek, all rely on TSMC to make their most advanced semiconductor chips. Almost all the leading-edge chips in iPhones, iPads, Android phones, GPUs, CPUs, accelerated computing processors used for AI applications, and data center processors are made by TSMC. Obviously, past performance does not guarantee future results. We have to be forward-looking instead of backward-looking when it comes to investing. But I still want to show you TSMC's past performance here compared to the S&P 500. Here you can see TSMC stock, they outperformed the S&P 500 substantially over the past 5 years. Intel is one of TSMC's biggest competitors in the semiconductor foundry market. In comparison, Intel they underperformed both TSMC and the S&P 500 substantially over the past 5 years. Right before making this video, another biggest news is that Nvidia is now the most valuable chip company in the world. Nvidia's market cap is almost at 1 trillion at the time of making this video. In comparison, TSMC's market cap is at 456 billion at the time of making this video. Nvidia's stock soared as much as 25% right after its earnings release because there's a huge demand for Nvidia's most advanced data center GPUs such as H100 and A100 GPUs that are used for generative AI, large language models, and AI chatbots such as ChatGPT. So in this video, I will talk about these topics to see if TSMC is one of the best investments of the long run and to see if TSMC stock is undervalued now. I will talk about why Warren Buffett sold TSMC stock after he held the stock for only a few months. TSMC's biggest risks going forward. Will Intel surpass TSMC to become a chip-making leader again? TSMC's economic moats and long-term growth prospects. TSMC stock valuation, and will I buy TSMC stock? If you like this video, make sure to hit the like button, subscribe, and turn on the notification button. I will continue to make many excellent stock reviews and investing videos every week that will help you become a great investor. Each video usually takes me 20 to 30 hours to make, so if you like this channel and want to support it, check out my Patreon blog in the video description. Our goal is to help our members grow their stock portfolios to over 7 figures over time. Once you become a Patreon member, you can follow all the stocks I'm investing in for the long term and download the latest intrinsic value calculators for all the stocks I'm analyzing, so you will know when a stock becomes undervalued, fairly valued, or overvalued now. Also, you have access to all my latest stock ratings for all the stocks I'm analyzing. The link is in the video description. Take a look, let's start. So why did Warren Buffett sell TSMC stock after holding it for a few months? Warren Buffett decided to sell TSMC stock because of the geopolitical tensions between China and Taiwan and between China and the US. He doesn't like that TSMC's most important semiconductor fabs are in Taiwan. He's concerned that China may eventually annex Taiwan, so he decided to invest in Japan instead of Taiwan. He said, Taiwan Semiconductor is one of the best managed companies and important companies in the world. I don't like its location. There's no one in the chip industry that's in their league, at least in my view. According to The Economist, Taiwan produces over 60% of the world's semiconductors and over 90% of the most advanced ones. TSMC is the largest semiconductor company in Taiwan and the most important semiconductor foundry in the world. TSMC's biggest risk is geopolitical risk. TSMC's most important semiconductor fabs are mostly in Taiwan. Many people, including the US, are concerned that China may eventually invade Taiwan. If this happens, China would take control of TSMC's most important fabs and the most advanced chip-making technologies and tools in the world. According to Reuters, a Chinese invasion of Taiwan could potentially halt production by the world's largest advanced semiconductor chip maker, wiping out up to $1 trillion per year from the global economy per year in the first few years. Advanced semiconductor chips produced by TSMC are used in 90% of almost every category of electronic device around the world. This is my opinion and my prediction here. I believe the US and its allied countries will prevent China from invading Taiwan using sanctions and export restrictions. The biggest reason is that the US does not want China to become the chip-making leader and does not want China to have the most advanced chip-making technologies and equipment in the world. The US already restricts Nvidia from selling the most advanced AI chips such as the A100 and H100 GPUs to China. The Netherlands already restricts ASML from selling EUV lithography systems that are essential for making the most leading-edge chips to China. Japan is also restricting its domestic companies from selling specific chip-making tools to China. Obviously, if this invasion happens, it will cause a global crisis because most companies in the world, such as Apple, AMD, Nvidia, and even Tesla, rely on TSMC to make their most advanced chips. According to the Director General of Taiwan's National Security Bureau, TSMC needs to integrate global elements before producing high-end chips. Without components or equipment like ASML's lithography equipment, without any key components, there's no way TSMC can continue its production. In my opinion, I think he's mostly right. TSMC cannot operate by itself if Taiwan is invaded. This is because the US and its allied countries will stop selling many essential chip-making components and equipment such as DUV and EUV lithography systems to TSMC if Taiwan is invaded. To reduce geopolitical risk, TSMC is expanding outside of Taiwan and is building fabs in the US, Japan, and Europe. Management said this in the recent earnings call. Finally, I will talk about TSMC's global footprint and talent development status. As we have said before, we are expanding our global manufacturing footprint to increase customer trust, expand our future growth potential, and reach for more global talents. In Arizona, despite some challenge in obtaining permits, our fourth fab is scheduled to begin production of N4 processing technology in late 2024. In Japan, we're building a specialty technology fab. The volume production is scheduled for late 2024. In Europe, we're engaging with customers and partners to evaluate the possibility of building a specialty fab focusing on automotive-specific technologies based on the demand from customers and level of government support. So, will Intel surpass TSMC in chip making? In my opinion, I don't think Intel can surpass TSMC in chip making and process node technologies over the next several years. Here is why. At the time of making this video, TSMC's second biggest competitor is Samsung Foundry. TSMC's third biggest competitor is Intel. If you follow the semiconductor industry, you will know that Intel has fallen behind TSMC and AMD for several years already because of many product delays and Intel's ongoing execution issues. Right now, Intel is aiming to become a chip-making leader again by 2025. Intel is trying to become a chip-making leader again by achieving 5 process nodes in 4 years and by making its own semiconductor foundry to compete with TSMC and Samsung Foundry. Obviously, this is extremely hard to achieve. This will require Intel to have perfect executions between now and 2025. Based on what I know, Intel has a very poor track record of releasing new products such as Sapphire Rapids CPU on time. Even under the current management, the company still has many execution issues. This is why Intel is at least one generation behind TSMC's process node technologies. Intel is also behind AMD in many desktop CPUs and data center CPUs, especially in power efficiency. In fact, over 2 years ago, I made this Intel stock analysis video. I predicted that Intel is a value trap. I also predicted that AMD would eventually surpass Intel in market cap. Of course, many people did not agree with me when I said that Intel is a value trap. I also said that Intel has too many execution issues. Fast forward to today, AMD's market cap is much higher than Intel's market cap, so I was right about Intel falling further behind AMD. Here you can see Intel stock has underperformed TSMC and AMD substantially during this period here. This is my prediction here. Even if Intel can achieve 5 process nodes in 4 years, which will require Intel to have perfect executions between now and 2025, Intel will still not have the same manufacturing capacities as TSMC and Samsung Foundry. More importantly, I believe most customers such as Apple, Nvidia, and AMD will still choose TSMC to make their most leading-edge chips. This is because TSMC has a much better track record of releasing new process nodes on time, has the largest chip manufacturing capacities in the world, and has the most advanced process node technologies. Another thing we should consider is this. I believe this is one of TSMC's biggest competitive advantage. TSMC does not compete with its customers. In comparison, Intel competes with Apple, Nvidia, AMD, Qualcomm, and many TSMC customers in chip designs. So why would companies such as Apple, Nvidia, and AMD outsource chip manufacturing to Intel's foundry business if Intel can gain access to their intellectual properties? Now, I want to talk about TSMC's biggest competitive advantage, economic moats, and long-term growth prospects. This is from Morningstar. This explains TSMC's biggest competitive advantage. In my opinion, I believe it's nearly impossible for competitors to copy TSMC's chip-making technologies, process nodes, manufacturing capacities, and economies of scale. We believe TSMC's wide moat stems from its cost advantage and intangible assets, which are realized from its leading position in process technology or nodes. TSMC's long-standing leadership in node advancement comes from its ability to correctly and consistently prioritize the right areas in which to innovate for nodes, while maintaining fiscal discipline. Process technology leadership not only enables TSMC to improve power, faster performance, and smaller area or PPA, cost per chip and time to market, which are critical for the competitiveness of computing devices, but also justifies higher prices than peers. As such, we believe that TSMC's leading position in the advanced processes will contribute to attracting and retaining more customers, more stable utilization of ever-expanding production capacities, and lower production costs, generating a higher return than its peers because of the cost advantage, and as a result, ensuring sufficient profits to fund research and development and capital expenditures on subsequent nodes. This virtuous cycle of intangible assets brought by heavy R&D and cost advantage brought by better power performance and area or PPA reinforce each other, preventing smaller peers catching up. In our view, in fact, TSMC has been leading nodes advancement and maintaining over 50% market share since the early 2000s, and its gross and operating margins have been at least twice as high as those of its closest peers for years. While there were 6 companies with cutting-edge nodes when the industry introduced 16 or 14 nanometer fabs around 2015, there are currently only 2, TSMC and Samsung Electronics, selling 5 nanometer chips as smaller peers such as Global Foundries and UMC decided not to introduce sub-14 nanometer processors. TSMC's historical projected return on invested capital, stable market share, and superior margins all support our wide moat rating. Multiple technical barriers and high capital requirements from TSMC's wide moat. Semiconductor manufacturing is inherently capital intensive, while for every foundry, each successive node requires exponentially more R&D and capital expenditures. Customers are only willing to pay a premium to first movers. Though node advancements are viewed as evolutionary, manufacturing methods may change drastically in every few generations of process technology. In CPUs and mobile system on chips, where adoption of new nodes first occurs, planar processes are only used up to the 22 or 20 nanometer process. Thin Field Effect Transistor or FinFET is used from 16 or 14 nanometer onward. After FinFET comes Gate-All-Around or GAA that will be adopted on TSMC's 2 nanometer and Samsung's 3 nanometer nodes. Successive technologies improve electrical performance and miniaturization to fit as many transistors as possible onto chips, thus improving performance relative to cost. In a nutshell, breakthroughs in semiconductor manufacturing aim to improve PPA. GAA or Gate-All-Around is the new technology hurdle and major potential intangible asset that foundries must overcome to master 3 nanometer and later nodes. TSMC plans to implement GAA from 2 nanometer with mass production projected in 2025. We do not expect foundries apart from Samsung to commercialize GAA-derived products owing to prohibitive costs, with R&D alone estimated to exceed $1 billion. The adoption of GAA should lead to better and more stable electrical performance even as circuitries become more intricate. Currently, only TSMC, Intel, and Samsung have unveiled timetables to introduce GAA-derived products. We think TSMC's dominant market share and strategy to focus on high-end products put it in the best position to outspend competitors in terms of R&D to advance through GAA and beyond. Close relationships with industry giants help justify investments in process advancement. One of TSMC's intangible assets is strong relationship with leaders in multiple subsectors like Apple in mobile chips, Nvidia in graphic processors, and Hynix in reprogrammable chips. Combined with its leaders in process technology, TSMC can readily justify hefty investment in new process nodes by convincing customers to share detailed roadmaps, while smaller foundries have to build facilities first and wait for orders that TSMC cannot fill. Over the decades, TSMC has helped AMD to maintain competitiveness in PCs, Apple and Qualcomm to advance smartphone technology, and now also with Nvidia, Marvell, Hynix, among others to develop AI, HPC, and automotive electronics for the next decade and beyond. TSMC is the most important pure-play chip maker in the world. TSMC has had over 50% of the market share in the semiconductor foundry industry for many years already. More importantly, TSMC makes around 90% of the most advanced chips in smartphones, electric vehicles, personal computers, computer workstations, and data centers. Samsung is the second biggest player in the semiconductor foundry market. Going forward, I believe TSMC will benefit the most from the large demand for AI chips designed by Nvidia, AMD, Qualcomm, and other chip designers that rely on TSMC to make their chips. TSMC will benefit the most whenever Apple sells more iPhones, iPads, and Macs each year. This is because all the Apple Silicon chips are manufactured by TSMC. Apple is TSMC's biggest customer. Right now, more customers are buying electric vehicles because EVs are much more affordable than before. Many traditional car makers such as Ford and GM are making more EVs in order to compete with Tesla. EVs need a lot more chips than traditional internal combustion engine cars. Also, autonomous driving platforms such as Tesla's full self-driving FSD service will need many more advanced chips going forward. I believe all these mega trends such as generative AI, AI chatbots, AI chips, AI training and AI inference, large language models, cloud computing, 5G smartphones, and electric vehicles with autonomous driving tech will benefit TSMC the most going forward. This is because most companies, including Nvidia, rely on TSMC to make their most advanced leading-edge chips. At the time of making this video, TSMC has the most advanced node technologies, much more manufacturing capacities, and better economies of scale than Samsung. This is why Apple, Nvidia, AMD, Qualcomm, and many tech companies mainly rely on TSMC to make their chips. Here's one example here. According to the Wall Street Journal, Nvidia CEO Jensen Huang said, "We're seeing incredible orders to retool the world's data centers. Demand for Nvidia's chips has been so hot lately that its supply chain has struggled to keep pace." Nvidia's chief financial officer said Wednesday that the company had secured substantially higher supplies of chips for the second half of the year. Nvidia designs but doesn't make its own chips. The company embraced from the get-go a business model that farm out production to contract chip makers, including the world's largest Taiwan Semiconductor Manufacturing. There's an enormous demand for Nvidia's data center AI chips and systems right now. This is because many companies are building their AI chatbots similar to ChatGPT, large language models for AI applications, and generative AI services that require a lot of computing power. I believe the current AI mega trend will benefit TSMC a lot going forward, since TSMC makes all the high-end chips for both Nvidia and AMD. Other mega trends include 5G smartphones, followed by mixed reality headsets and AR glasses. All these mobile devices need the most leading-edge chips using TSMC's 5nm and the 3nm processes. Apple is TSMC's biggest customer. Apple usually has access to the most advanced node technology such as the 3nm or N3 process from TSMC before other customers. I said this earlier, as long as Apple is selling more iPhones, iPads, and Macs every year, TSMC will also earn higher revenues from Apple. I want to show you TSMC's node technologies here. Based on what I know, TSMC's node technologies are ahead of Samsung Foundry and at least one generation ahead of Intel. This is why most companies such as Apple, Nvidia, and AMD rely on TSMC to make their leading-edge chips. This is TSMC's node technologies roadmap. The most important part is this: TSMC is expected to start mass manufacturing chips using its N2 process or 2nm process starting in 2025. TSMC's upcoming N2 process will make chips even smaller, more powerful, and more energy efficient than its N3 process. TSMC's management said this in the recent earnings call. Now I will talk about our N2 status. Our N2 technology development is progressing well and is on track for volume production in 2025. Our N2 top no transistor structure to provide customers with a best performance, cost, and technology maturity. Our nanosheet technology has demonstrated excellent power efficiency, and our N2 delivers full node performance and power benefits to address the increasing need for energy-efficient computing. At N2, we're observing a high level of customer interest and engagement from both high-performance computing HPC and the smartphone applications. In terms of revenue by technology, you can see TSMC's N5 and N7 processors contributed around 50% of the revenues in the most recent quarter here. Similar to N7 and N5 processors, TSMC's upcoming N3 and N2 processors will likely contribute the most revenues. This is because most tech companies such as Apple, Nvidia, and AMD will want to use the best node technologies to make their chips more powerful and more power efficient. In terms of revenue by platform, high-performance computing, HPC, and smartphone platforms contributed the most revenues in the most recent quarter here. Here you can see HPC, smartphone, and DC platforms revenues did decrease quarter over quarter here. At the time of making this video, the entire semiconductor industry is still in a large inventory correction, and it's not fully recovered yet. Many companies still have too many inventories, such as CPUs and GPUs to sell. Also, the demand for PCs, laptops, PC components, and smartphones has slowed down a lot in recent quarters. Because of high interest rates, high inflation, many macroeconomic uncertainties, and the pull-forward effect that made demand much higher during the pandemic. TSMC's management believes that the semiconductor market may start recovering in the second half of 2023. Management said this about the current inventory correction in the short term. However, due to weakening macroeconomic conditions and softening end market demand, fabless semiconductor inventory continued to increase in the fourth quarter and exited 2022 at a much higher level than we expected. In addition, the recovery in end market demand from channels reopening is also lower than our expectation. Therefore, the fabless semiconductor inventory adjustment in the first half of 2023 is taking longer than our prior expectation. It may extend into third quarter this year before rebalancing to a healthier level. Management also gave this guidance for the full year of 2023. We now expect our full year 2023 revenue to decline low to mid-single-digit % in US dollar terms, and our business to do better than both semiconductor excluding memory and foundry industries, supported by our strong technology leadership and differentiation. I want to show you TSMC's most recent financials here. Here you can see TSMC has around 53 billion of cash. In comparison, the company only has nearly 30 billion in debts. This means TSMC can pay off all its debts and still have around 20 billion of cash. This suggests that TSMC has a very strong balance sheet. At the time of making this video, I believe this shows that TSMC is likely a better investment than Nvidia because TSMC is much more undervalued and it's also more profitable compared to Nvidia. Of course, this assumes Taiwan will not be invaded. Here you can see TSMC's market cap is at 456 billion. In comparison, Nvidia's market cap is almost 1 trillion. TSMC earns more revenues, operating income, and free cash flow than Nvidia. More importantly, TSMC makes all the high-end chips for Nvidia. This means TSMC will earn more revenues if Nvidia continues to sell more GPUs and AI chips for consumers and data center customers. In my opinion, this financial suggests that TSMC is much more undervalued compared to Nvidia. In the past 10 years, TSMC had very consistent revenue growth in most quarters, but in the most recent quarter, its quarterly revenue did decrease a lot year over year because of the large inventory correction and the macro headwinds I talked about earlier. In my opinion, I believe it will take TSMC several more quarters to recover once the Fed starts lowering interest rates and once the PC market and the smartphone market start recovering. If I have to make an educated guess, I believe TSMC's quarterly sales should start recovering in the second half of 2023 or sometime in 2024. Even during this large semiconductor correction, there's a very large demand for Nvidia's AI chips such as A100 and H100 GPUs used for AI training and inference, large language models, AI chatbots like ChatGPT, and other AI applications. I believe this AI mega trend will help TSMC's quarterly sales recover faster because TSMC makes all the leading-edge chips for Nvidia, AMD, Qualcomm, and other fabless chip designers. In terms of revenue forecast, Wall Street analysts expect that TSMC's revenue will decrease by about 5% year over year in 2023. TSMC's management also expects that TSMC's revenue will decrease at a low to mid-single-digit % in 2023. In terms of EPS forecast, Wall Street analysts expect that TSMC's EPS should decrease by about 22% year over year in 2023. Then TSMC's EPS should start growing again afterward once the entire semiconductor market starts recovering. I want to show you how to calculate TSMC stock's intrinsic value here, so you know when TSMC stock becomes undervalued, fairly valued, or overvalued. If you want this calculator, you can download it from my Patreon blog. The link is in the video description. These are the key assumptions in this calculator. First, I define TSMC's intrinsic value as its future free cash flows discounted to the present day. I used a discount rate of 13% here. I'm using a high discount rate here because TSMC's biggest risk is the geopolitical risk I talk about in this video. I expect TSMC's free cash flow margin will be slightly lower at around 21% over the next 5 years. This is lower than the past 5 years' average free cash flow margin. This is because TSMC is building more fabs in the US, Japan, and likely Europe that will likely require higher capital expenditures going forward. I believe TSMC's revenue will drop between 0% and 10% year over year in 2023. Then I expect TSMC's revenue will start growing at double-digit rates between 10% and 20% each year afterward. This assumes the entire semiconductor market will start recovering in 2024. Let's go over these 3 case scenarios here: worst case, normal case, and best case scenarios. Under the worst case scenario, we're forecasting TSMC's revenue will drop 10% in 2023. Then we're estimating TSMC's revenue will grow at these rates afterward. If we forecast TSMC's free cash flow over the next 5 years and discount the free cash flow to the present day, TSMC's intrinsic value should be around $502 billion for the entire company, or $97 per share. I'm giving this scenario a 25% probability here. Under the normal case scenario, we're forecasting TSMC's revenue will drop 5% in 2023. This matches Wall Street analysts' consensus revenue forecast. Then we're forecasting TSMC's revenue will grow at these rates afterward. TSMC's intrinsic value should be around $549 billion for the entire company, or $160 per share. I'm giving this scenario a 50% probability here. Under the best case scenario, we're forecasting TSMC's revenue will stay flat in 2023. This assumes TSMC's revenues will recover quickly in the second half of 2023 because of the large demand for AI chips. Then we're estimating TSMC's revenue will grow at these rates afterward. TSMC's intrinsic value should be around $600 billion for the entire company, or $116 per share. I'm giving this scenario a 25% probability here. If we add all these numbers here, TSMC's intrinsic value should be around $106 per share. I also used the price to book valuation model here to estimate TSMC's intrinsic value, which should be around $550 billion for the entire company, or $106 per share. If we take the average of both valuations here, TSMC's intrinsic value should be around $106 per share. In comparison, Morningstar estimated TSMC's intrinsic value to be much higher at $139 per share. This means I believe TSMC is either fairly valued based on my intrinsic value calculations, or is still greatly undervalued based on Morningstar's fair value estimate. So will I buy TSMC stock going forward? My answer is yes. I will likely buy more TSMC shares going forward as long as TSMC stock is undervalued. In fact, I already have TSMC shares in my growth stock portfolio here. This is one of my personal stock portfolios. I also have other portfolios that have the same stocks and the same investing strategy. I think this portfolio is doing very well even in this high inflation market because I've invested in Apple, Microsoft, Alphabet, Adobe, ASML, AMD, Visa, and MasterCard. I believe they are some of the best businesses in the market. Going forward, I believe TSMC will benefit from the current AI mega trend. For example, if Nvidia continues to sell a lot of data center GPUs for generative AI and other AI applications, TSMC will also make a lot of money because TSMC makes the most advanced chips for Nvidia. TSMC is one of the most important mission-critical businesses in the world. If Taiwan is invaded, I believe it will cause a global crisis because many companies, including Apple, Nvidia, and AMD, rely on TSMC to make their most advanced chips. Of course, the US does not want this to happen. The US does not want China to take control of TSMC and become the chipmaking leader in the world. I believe the US and its allied countries such as the Netherlands and Japan will use sanctions and export restrictions to prevent China from invading Taiwan and taking control of TSMC. TSMC cannot operate by itself without the essential chipmaking components and tools from other countries such as Japan, the Netherlands, and the US. This is why I don't think TSMC can be taken over by force. TSMC, in my opinion, is too important for almost all businesses that need semiconductor chips, especially leading-edge chips. I also want to give you a quick portfolio update here. In my previous video over 1 week ago, I said that I would not buy PayPal shares even though I believe it's substantially undervalued. After thinking about PayPal for almost a week, I decided to buy a very small position in PayPal because I believe PayPal's payment processing business will eventually turn around. Realistically, PayPal is not going to have very high revenue growth rates as before, but its PayPal branded payment checkout is still very popular in online shopping. PayPal is expanding more in unbranded payment processing. The company is also cutting more costs to improve its operating margin. I'm essentially making a very small bet on PayPal, and I'm betting that its payment processing business may eventually turn around. This is less than 1% of this portfolio here, so the risk is much lower for me. Now, all these are only my opinions and my analysis based on my research. They are not financial advice. There are always risks associated with investing. You will need to do your own research and do your extra due diligence first before investing in anything. Thank you for watching this video and supporting our channel. This is Victor from the Intelligent Investor channel, and I will see you in the next video.